Hey everyone, Blake and I hope this finds you and your family well. What we're doing today is another episode of what we call our Small Bite series. Blake and I just spent some time over in Washington, D.C. about 2 weeks ago with one of our investment partners, Signature Investment Advisors, or SIA, as a few of you watching this video will recognize that name. We spent about 2 days with their Chief Investment Officer, Darren McCoy, and a handful of their market analysts, where we tackled where are we today in current market cycles and what are some expectations moving forward. The main question we looked to answer was, are we there yet? As we wrap up the second quarter of 2022, we are technically in a bear market. Thus far, the S&P 500 is down 20 to 21% year to date, the NASDAQ falling close to 30%. Even the bond markets are suffering the worst start to a year since before George Washington was president.
Yeah, that's Alexander Hamilton, first U.S. Treasury Secretary.
Yeah, let that sink in for a minute here, guys. I mean, bonds, which is a gigantic asset class, is having the worst start to a year in the last 235 years. It's a big deal.
Yeah, Austin, in our last Small Bites video, we went through a list of things that were kind of weighing down the markets, and some of those were obviously still fighting, but if you haven't seen that video, go back and watch it. It's on our YouTube channel, IFG Memphis. So stocks are down, bonds are down, gas and groceries are through the roof. We're now fighting inflation that we haven't seen in 41 years, I believe it is. But we're all human. And unfortunately, we're not wired in a way that makes investing easy. We're wired to run away from a bear market, when we should be running towards it. And if not actually running towards it, at least leaning into it to a degree, because that's when wealth is created. While we are investing in interesting times with a potential economic recession ahead, it's wise to remember that stocks price in future events. Markets look forward. It's what they do, okay? So they've already sold off on higher inflation fears. They've already sold off on Fed policy mistake. Are they raising rates enough or too fast or too slow? So a lot of that, hopefully, has already been priced into the market. The Fed's got a hard job. There's no doubt about it. They're trying to bring inflation back to earth by bumping up interest rates, all the while not sending us into a recession. That's an uphill climb. That's going to be tough.
Right, and we understand it's a tough concept to grasp, especially with a looming potential recession ahead. So guys, let's use the last non-pandemic recession, 2008, as a reference. Everyone remembers the great financial crisis and the subsequent market sell-off of 14 years ago. But what you may have forgotten is that stocks bottomed in late 2008 and again in early 2009, with most of the pain centered around Wall Street. However, the real economic pain on Main Street didn't come until later. Fast forward into 2010, stocks were higher, while most of the pain on Main Street continued, and some home prices not bottoming until 2011.
Yeah, so a market sell-off typically precedes a recession. They don't always happen at the same time. Most of the times they don't happen at the same time. But now, just because we're having a sell-off doesn't necessarily mean we're going to have a recession. One doesn't always cause the other.
Yeah. And, if an investor, Blake, had just waited until they felt like the economy was better, they would have missed out on 50 to 100% of the stock price recovery.
Yeah, and you said, are we there yet? And that was the original question. And I don't know. I don't know if we're in the eye of the hurricane or if we've got clearer skies ahead. It's impossible to know. There's certainly data that supports that we probably or maybe have seen the worst of it, but we can't predict the future. So we simply can't trade our way out of this thing. We try to build all-weather portfolios and financial plans for the families that we work for.
In short, while a recession may lie ahead, and I could certainly argue that it may already be here, stocks very well may already priced that in. So stick to your financial plan. Stocks will sell off. It's what they do. But just make sure that you plan ahead so that you aren't a forced seller at the bottom. Simply put, short-term volatility is a price you pay now to reap outsized long-term returns in a market cycle.
So to wrap this up, do your best to hang in there. We know that it's difficult. Know that we're working day in and day out to try to keep everybody individually on their plan. Have a great summer. Go do the things that make you happy with the people that make you happy. And eventually this too will be in our rearview mirror. We are only a phone call away if you need us. Thanks, and we'll do it again.